Hi traders, welcome to this video. I asked you on Twitter for new topics and for questions which I can answer in my YouTube channel and in my YouTube videos. And I got a lot of questions from you, so thank you very much for that. And a few of those questions are about the relative strength rating and the relative strength line, or the RS rating and RS line. And yeah, I want to try to answer the most questions here in this video. So here you can see a lot of questions and I selected some of them and I want to answer them here in this video. So thank you very much that you sent me and asked me those questions. But before we jump into the question and the answers, I want to cover the RS rating and RS line and want to explain you the difference because a lot of those questions were about the difference. So what is the IBD RS rating and what is the RS line? Are they different things, or are they the same? Just a different representation. And the IBD RS rating and the RS line are two total different things. So the IBD RS rating compares a stock price or a stock to all other stocks which are covered from Investor Business Daily. So Investor Business Daily has a large database with, I think, over 7,000 stocks, and they calculate a proprietary rating of all stocks. And the higher the number, the stronger the stock in comparison to all other stocks covered from IBD. And I made a screenshot here from the IBD website, so investors.com, and they wrote, so this IBD Smart Select Corporate Rating is a measure of a stock's price performance over the last 12 months compared to all stocks in our database. So they look back over the last 12 months and put a rating on every single stock. And I'm not 100% sure when they update those ratings, but I think it's daily updated, and so every day you get a measurement and a relative strength rating from IBD. And again, so the higher the better, but it does not mean that a 99 RS rating stock will automatically outperform stocks with lower rating. Sometimes it's also the opposite, because if a stock has a 99 RS rating in IBD, it can also mean that the stock had a very, very strong performance in the past and maybe is overextended and will turn into a consolidation or something. I personally, when I select stocks, I always try to select stocks which have an IBD RS rating higher than 90. And why? So why 90? Because the research from William O'Neill and also my own research shows me that a lot of the super winners, the real and true market leaders in the past, had an RS rating of 90 or more. William O'Neill personally said, okay, an RS rating from 85 is still okay. So, and in his model books and his model research, he always found a lot of stocks and past true market leaders with an RS rating higher than 85. But if you look into other research work and also my own research, you want to be very selective, and that also means that you want to see at least an RS rating of 90. I personally also buy stocks with an RS rating lower than 90, but in that case, the stock needs something special, so like a special story or very strong growth or something, to compensate for the lower RS rating. The RS line, which is the blue line here in the screenshot, in the left screenshot from MarketSmith, or the black line here in the screenshot from TradingView, is a total different thing. The RS line compares always the performance of the stock to the S&P 500. So that means, for example, if the stock has a change of say 3% today and the S&P 500 is flat, that means the stock is outperforming the S&P 500. And the opposite is also true. When the S&P 500, for example, is up 2% today and the stock is flat, that means it underperforms the S&P 500. And this is represented in this RS line. So every time the stock outperformed the S&P 500, the line goes up. And every time the stock underperforms, the line goes down. And when they have a similar performance, the line is flat. And again, so the IBD RS rating compares all stocks with each other. And the RS line always compares the stock to the S&P 500. And with the RS line, you are able to find stocks which are stronger than the S&P 500. So move faster, move stronger than the S&P 500. That's the goal of the RS line. And when I look at the RS line, I want to see two things. The first thing, and this is the most important thing, is the RS line must go up. So it must really go or move higher. The second thing is the RS line should be in sync with the price. So that means when the price makes a new all-time high or a new 52-week high or is breaking out of a consolidation, the RS line should do the same. So when you see a breakout to a new 52-week high in the stock price, you should see the same in the in the RS line. Doesn't matter if it comes from IBD, so from MarketSmith, or from TradingView. So the calculation is exactly the same. So this is very important to understand, so that the RS rating from IBD is something different than the RS line. And I use both. So I use the RS rating to filter for stocks, and I use the RS line to see how strong is the stock. Is it stronger than the index or not? Okay, I hope that this will help you to understand the difference. And now let's look into your questions. So the first question I got here was on YouTube, and it was about the numbers of the RS line. So in TradingView, when you add the indicator to TradingView, and by the way, I have several videos about the relative strength line in my YouTube channel, and I also explain in another video how you add it to TradingView. And in TradingView, you see on the right side, you see the numbers. So it's going from 0 to infinity. But the numbers itself have no meaning. So it is absolutely unimportant. It's just the result of the calculation of the formula. So the only important thing if you look at the RS line is the slope. So is it going up? Does it mirror the stock price action? So when you see a new high, do you see also a new high in the RS line or not? This is the only important thing. I hope that this is understandable for you. But you cannot use the RS line to filter for stocks or something. And you cannot say an RS line value of 0.0 1 is better than 0.5 or something. So it really doesn't matter. So it's absolutely unimportant. The only thing was what really counts is the line. Another question I got here on Twitter is sometimes I see a great stock, but its RS line is 79 or so, but O'Neill recommend RS above 85. So this question and this tweet was not about the RS line, but the IBD RS rating. And this is exactly what I said at the beginning. So of course, you see a lot of good stocks with nice bases and nice chart patterns, which only have an RS rating below 80, so sometimes 50 or something. Amazon, for example, at the moment has a very low RS rating, but a very nice base. And I know it's very difficult to understand, but when you look at stock selection and when you look at trades, you must always have the odds and the odds from your own research in your mind to find a good winner. And that's important. So the single stock itself is not very important. It's always about a series of trades and a series of stocks. So what happens over a series of, say, 100 stocks or 100 trades? And if you take a series of 100 trades and you always buy stocks with a low RS rating, the odds are very high that you select a lot of laggards. So that means stocks which underperformed in the last 12 months. And we know from research and all the work from Mark Minervini or Dan Zanger, O'Neill, whatever, so there are a lot of authors and a lot of traders, we know that strength begets strength. So that means stocks which had a very strong performance in the past are more likely to perform also better in the future. So, and behind those companies is a good running business model. And that drives the market cap higher. And this is why O'Neill and also IBD are looking on the IBD RS rating and say, okay, it must be high. Because in RS rating of 85 means that the stock belongs to the top 15% of all stocks in the database. And when you look back in charts, take, for example, an Apple chart, an Amazon chart, or whatever, you can see that in a good bull market, those stocks were able to print one new all-time high after one new all-time high. So, and when Amazon had doubled in the last 12 months, and then had a very nice consolidation for just a few weeks or just a few months, and then double again. So these are the stocks which are William O'Neill traded, or which I am also trading. So I look for stocks which behaved very, very strong in the past, in the last months, and then I jump on board into this trend, on this overall uptrend, and then surf on the wave higher to higher prices. And when I select stocks, they should have an RS rating of 90, and that means they belong to the top 10 stocks of 7,000 stocks covered by IBD. And I also want to focus on the best performing stocks, and this is why I'm looking for stocks with a high RS rating. But the opposite is also true, and this is, that there is no black and white in trading. And the opposite is also true, that stocks which have an RS rating of 99, so belongs to the top 1% of all stocks, they are also sometimes overbought or overextended, and they can turn into a consolidation or correction. And this is something where you must combine different things together. So price analysis, volume analysis, relative strength analysis, and to find out how much potential is in the stock or not. So, but to sum it up for these questions here, of course, a higher RS rating is better. And everything also what William O'Neill did was always about statistics. So he looked at all the super winners, and all the super winners had a higher RS rating above 85 before they started their big rallies. And this is why O'Neill selected this number. It's not random, it's based on his research, and what he and also I and all of the other traders try is to find stocks with the same characteristics, so to reproduce the trades and to find stocks which fit into this selection criteria. Okay, so let's jump to the next questions. Can the CRS be used in any time frame? So can the RS line, so the comparative relative strength line, so that means CRS, comparative relative strength line, be used in any time frame? Yes, of course, you can use it in any time frame. So you can use it in the daily, in the weekly, in the monthly, even in intraday charts. But the question is not, can it be used? The question is, does it make sense? So, and all the research work from William O'Neill and also my own research is always based on daily and weekly charts. So I use only the RS rating in daily charts. I don't use it in weekly charts because in the weekly charts I look more for price action and volume behavior and not on relative strength. So in the weekly chart it's really very easy to see if it outperforms the S&P 500 or not. So, but in the daily chart, especially in consolidations and in corrections, and also when the market and the overall market is in a correction, then it's not so easy to see if the stock outperforms. And this is one of the big benefits of the RS line. I don't use it in intraday charts or something because I think it's not so important in intraday charts if it outperforms or not. But it all comes down to your own trading approach. So when you find something where you can produce an edge, and when you find a strategy where the relative strength line is also important for intraday trading, then go for it. So there is nothing wrong with that to use it also in other time frames. So let's jump to the next question. It is a little bit longer, and I also highlighted one sentence here. So is there a specific reason you use the S&P 500 rather than the Nasdaq or QQQ, which is a Nasdaq ETF? Yes, I use the S&P 500. So there are two reasons that I compare my stocks to the S&P 500. The first one is William O'Neill did a lot of research and he always used the S&P 500. So, and if you want to base your work and your trading system on the work of others, you should make sure that you use the original settings. So, and this is one reason I use the S&P 500 because I know all the work from William O'Neill. And he was very successful with that. And I did my own research with thousands of stocks, and I came to the same results and I came to the same conclusions. So the S&P 500 is a good average for a lot of stocks. And on the other side, especially if you use a QQQ, for example, which is the Nasdaq 100, that means you always compare your stock to a very small basket of other stocks. So the index only contains 100 names and the S&P 500 contains 500 names. So the S&P 500 is a better comparison because it also covers more different sectors and more different stocks. And that's also why I'm using the S&P 500 and not the Nasdaq or triple Q for the RS line. But again, if you find something which is valuable for you and which is working, and where you say, okay, the Nasdaq is also helpful for me, or maybe if you trade only gold stocks and you compare your gold stock to a gold index or to a gold stock index, that's also true. So why not? Everything is allowed if you have an edge with your strategy. So try to find something which works for you. And for me, the S&P 500 is absolutely enough for my own stock trading. Let's look at another question. The minimum RS to be taken for screening. So he refers to the RS rating from IBD. And here I made a screenshot from one of my MarketSmith screeners. And by the way, I have several videos about stock screening also with MarketSmith in my YouTube channel. So if you are interested in settings and how to screen for stocks, so look into those videos. And I have one screener, and in the screener I use an RS rating more than 85. So that's not because William O'Neill selected that number. No, it's about I use 85 instead of 90 because I want to also see stocks which, for example, have an RS rating of 89 or 88 or something, so very close to the 90. And this is why I set the number a little bit lower and not exactly at 90, so that I get also some stocks which are very close to the ideal number of 90. That's all. Okay, so let's look at another questions or two questions which ask almost the same, and this is about the settings number behind the SPX. So you can, if you add the RS line to TradingView, you can also show a moving average on the RS line. This is the blue line you see here in the picture. I personally don't use it. I only add the moving average here for you to answer that question. And the setting you can, the value you can set for the moving average, this is the number here displayed in the indicator. And in my original video where I show you how to add the indicator to TradingView, I spoke about this number, and I think I set it to 13, so 13 weeks or 13 days. And in this screenshot it's 30, but I personally don't show this moving average in my charts, and this is that's why it's absolutely unimportant for me. So it doesn't, you cannot set anything which regards the RS line itself. So you cannot change anything about the RS line, because the RS line is always calculated day by day. So it compares always the day or the performance of the stock from today to the S&P 500 performance from today. So there is nothing you can change or set up or anything similar like this. All right, so another question also about the RS line. So what is the difference between the relative strength index and the comparative relative strength index? So this is something a lot of people are confused by, or a lot of people confuses. The RS line has nothing to do with the relative strength index. So the relative strength line, RS, is something totally different to the RSI. So you can Google both things, and you get the answer very simple from Google and from the websites. But the most important difference is that the comparative relative strength, or the RS line, compares the stock with the S&P 500. So it's always a comparison of the stock's price performance to the S&P 500. The RSI compares the stock with itself. So, and it compares the performance and the average performance of the stock with itself. So, and this is why you also get this overbought and oversold areas in the RSI. I personally, I don't use the RSI. A lot of people use it, but I found no value for my own trading. But I see it a lot in a lot of comments and a lot of questions on Twitter and also YouTube, that people always confuse the RS line with the RSI. But really, both things have nothing to do with each other. You also cannot say that for example, you also cannot say that an RSI value of 80 means that the stock is strong. You cannot say that. And it's also, you cannot say that an RSI value of 30, for example, means the stock is underperforming or something. So you cannot use this indicator because it has no relation to an index or to the S&P 500. It only compares the stock performance, so the current stock performance, with the past stock performance, and then it builds up this index. So it's definitely a useful indicator for if you are, for example, trade maybe in sideways ranges or something. But I personally found no value for my own trading about that. All right, so now we are at the end of the video. I hope that those answers help you to understand the RS rating, the RS line, and also the difference to the RSI much better. And if you have other questions, you can leave a comment here, and if you are interested, you can subscribe to my free newsletter. So I send it out every Sunday with a lot of trading tips and also 3 stocks from my personal watch list. And as a welcome gift, you get my free ebook. So 25 lessons of the stock market. If you like the video, so give it a thumbs up. If you don't like it, give it a thumbs down. Leave a comment if you have questions, and also follow me on other social networks like, for example, Twitter or Instagram.